In a world where crypto is fast becoming more and more popular, fortunes are made and lost in the blink of an eye. This, my friends, is a crypto roller coaster. Now, to navigate these crypto seas, we need to understand how we are going to calculate to make sure that we can get those impressive yields and gains. Now, in crypto, you're going to be overwhelmed with many emotions, etc., and they are going to come into play when you are trading or investing in this space. However, we need to make sure that we educate ourselves with the knowledge, with the strategies, so we can obviously make those big profits within this industry. Now, as you know, my friends, the crypto space is ruthless. It is not for the faint-hearted. It demands discipline, skill, being relentless oneself, non-compromise with your day-to-day strategies in those routines. And as you know, the risks are very high, but the rewards are absolutely huge. So let's jump into the 8 tips that I think you definitely need if you're going to be successful in crypto trading or investing. And number 1 is understanding the basics. It's very simple, but if you don't understand the basics, you will not make any money and be successful in this industry. Now, that may sound obvious to a lot of people, but not a lot of people do that. I, for one, when I first got into this space many years ago, I didn't learn the basics, and I did it backwards of trying to get ahead of the game and trying to get rich quick without understanding the basics of trading. Now, the basics are very simple. As you know, when I do my mentorship, people ask me, what's a buy order? What's a limit order? What's a sell order? You know, what's buy side liquidity? What's sell side liquidity? The very basics of understanding what's actually happening on the price action. Without that, you're just going to be overwhelmed with charts, with many different strategies, with too many lines, and you get lost within the noise. Once you've understood the basics, we need to know fundamental side, we need to know market analysis, we need to understand price action. Now, these are just the basics before you even get into the other disciplines that you need. But without these foundation points, and definitely without understanding the basics, you're never going to get anywhere. My final point when it comes to understanding the basics is understanding what you're trading, what you're buying, and what you're selling. Each asset will have a very different foundation. It will move in different times of the year. It will move at different times of the day. Now, as you know, predominantly we trade BTC and ETH, but at the end of the day, there are other altcoins that can move, etc., on their own thing. So you can't just jump in and out of any asset. You need to understand the asset that you are trading. Now, number 2 is what we don't do, and that is set clear goals. When you first start trading, ultimately you're just about how much money can I make? Or you're focusing on how much money. And you will quickly start to understand that you need to come away from that to actually be successful in trading. Because if you're just concentrating on the money value and not the process and not the skill and actually figuring out how to obtain that money, you're never going to get ahead in the game. So you must make your objectives very clear from the beginning. How long you want to be in this industry for, what is your target, how you're going to get there, but try not to make it a monetary goal rather than a percentage or how many trades you would want to win or where you want to be in a few years. What's really helped me is counting my trades by percentages of the capital that I've put into that trade. When you're setting your goals, you also need to make sure that you know your risk parameters. If you don't understand your risk parameters, and we will speak about risk management, it's very important that you know what you are risking when you're getting into each trade. That's very important for all types of traders, because if you don't understand that, you're not going to know when to get in and out of the trades and how much you are risking on that trade. And my third point is setting clear goals. Is you need to journal. You need a trading plan. The amount of times that you've heard this and you've probably ignored it, you need to write down your trades until you are very comfortable with your strategy. So that, for me, you should be journaling at least for the first 12, 18, even 24 months of when you get into trades, when you don't, etc. And your trading plan will be within that journal. So you will have a set of rules. Your rules may be, for example, mine, I will not trade until I see a reaction from a certain level, and I will not trade until we hit our golden pocket or an order block. It's very simple as that. We then add fixed range volumes for Confluence, but you can see that I have a plan before I enter, and then I have a plan for exiting trades. Now, the third one that we're going to speak about is risk management. I've just briefly touched on that in my second point, but this is very important. And this comes down to stop losses. You will see many people speak about they may have a soft stop loss or they may not have a stop loss. However, when you're learning how to trade, you need to make sure that you've got a stop loss, because that's how you're going to learn whether your stop loss is too close, how much room you need to give. You won't get your account blown out when we get on a news candle if you get yourself caught up in a news candle. So understanding where to put your stop loss, definitely if you're using leverage as well, is absolutely vital when it comes to your risk management. Now, my second point in risk management is understanding how much capital you are putting on the trade from your main capital account. Now, what you will see a lot of the time is very, very simple, that you should only be risking 1% maximum on your capital, which means if you've got a $10,000 account and you are then putting a 10% on that trade, which would be $1,000, you're then only risking 10% of that 10%, which is 1% of your capital. If you stick to those basics and you start to understand where to put your stop loss, you know that you can go on a losing streak and it's not going to get you wrecked. So for me, a golden rule is only risking 1% of my capital on the trade. And if we lose 3 trades that day, we walk away from the charts and we do not trade. Now, it's not very often that I would go into 3 losing trades. However, you don't know. You can have a losing run in this game, just like you will have a winning run in this game. But you just need to make sure that your winners run and your losses are very, very short. Now, number 4 is technical analysis. As you know, I'm a TA guy, and this is how we trade. So we base everything, all our data, on technical analysis. And you need to understand what tools suit your personality of trading. For example, Market Cypher B is the one that I used to use for many, many years. The stochastic RSI, the fixed range volume, and my key tool is the Fibonacci level. I look for a Fibonacci reaction in the golden pocket. I will have a look at the RSI and I will see if we're overbought or oversold. And if we are, once we've hit a major level, that's my entry. That's how I get into trade. So understanding the tools that you use, it could be many, many tools that you use, very, very different from mine, whether it's volume, whether it's harmonic, whatever it may be, make sure that you understand exactly what tools that you are using, because if not, you will navigate around the system for far too long and you'll be jumping from tool to tool, and by then you could have learned your strategy. Now, my number 2 point when it comes to technical analysis is once you find the tool and the way that you like to trade, whether it's a certain time frame, whether it suits your lifestyle, etc., because you do not want to be at the screen once you understand what you're doing all day. You just don't want to do that. You want to make sure that you have your life away from that and your systems are in place. So once you understand exactly what tool you want to use, stick to that. And do not deviate and jump from trader to trader, as it may look prettier on the eye and their account may look bigger than yours. Do not make the mistake from hopping from one strategy to the other. Master the one strategy, because all strategies in this are the same when it comes to trading. You just need to make sure you're making money. There is no right way or wrong way to make money in trading, but make sure that your strategy is the one you stick to and you don't hop from strategy to strategy, because that will kill your momentum and you may give up. Now, the 5th point is fundamental analysis. Now, fundamental analysis, we need to know what's going on in the market. Now, there's a lot of people that ignore the news, the media, the fundamental aspects of psychology, etc., and they've got their system, they stick to the system. I tend to do that, and definitely in the community we tend to do that, but we do understand that we need to acknowledge the fundamental side of what's going on in the market space. Now, there's many, many resources that you can do that, but I just think if you could just stay aware of what's going on, you don't have to trade that, and you don't have to jump in and let it dictate that cognitive or that anchoring bias when it comes to emotion. But what you do need to know is that it is important, especially when you're in a trade. If you are in a trade and there is some news, there's some fundamental analysis, whatever may be going on behind the scenes, you could be wicked out and you might not understand why. So make sure you understand when the fundamental analysis and give yourself some knowledge of that. Now, tip number 6 is make sure that you start small and learn from the beginning. The biggest mistake that I see most people make, and I did it, and many people that I followed, is you think that you need a lot of capital to start trading, because you're seeing these small wins and you're saying, well, if only I had a 10 or 15 or $20,000 account, that 3% would be this amount. But the problem comes is you've not learned the strategy. Now, I went straight in many, many times and lost over 5 figures by trying to learn this, because I did not take the time to go through the list that I'm telling you now, to find myself a mentor, to do whatever I needed to do to understand that this is no easy game. There is a reason why probably 95% people fail at trading, because they jump in, they try and make a quick buck, and then they blame the systems, etc., for the scam. But actually, they're the scam, because they're scamming themselves of obviously learning a very, very important skill that can help them make money from anywhere in the world at any time of the day. Now, you don't want to be that person where you're starting from back to front and you want to learn quick rather than slow. So I always say to the students, I always say to the mentorees, start with $100, learn a strategy. And if you can take that $100 to $500, then again, you're going to understand the discipline. Now, emotions will come in when that $500 becomes $5,000. However, you will have gone through the school of trading and you will be ready for those emotional roller coaster rides when you get to that level. Now, this is not always about winning trades and being successful. You need to understand that you're going to have unsuccessful trades on your journey many, many times. And you need to learn from the unsuccessful trades, probably more than the successful trades, because you may get traders luck when you first go in. You may get 10 trades in a row and then a fortune and think this is very, very easy. And then you may lose one and it completely blow your account and also wreck your confidence. Now, it's your unsuccessful trades that you're going to learn from more than anything, because you're going to be journaling, you're going to be sticking to your plan. And a lot of the time when you do lose these trades, it's normally down to the fact that you have not stuck to your plan. Now, there will be times that you lose trades when everything was on right. Grade A. For me, you hit a level, you broke structure, you hit a golden pocket, RSI was overbought, but you still lose that trade. That's going to happen. There's no doubt about that's going to happen. But as long as you've stuck to your plan, you can learn from that. And then finally, when it comes to start small, is make sure you start on a demo account. Now, I know what you're saying. This is boring. It's not the same as when I get my emotions. Your emotions will come into play, and you are correct. It is very boring. You don't see real money, and the emotions are very, very different because it is not your money. But what you will do if you stick to a demo account for a period of time, sometimes people stick to a demo account for 6 months. I know that's hard, but you're not in no rush. If you are not in no rush when it comes to this in trading, you will crack this. And that's why going on a demo account is very, very important for you to understand the strategy, to understand your plan, and then you take that to real money and you'll understand the emotions once that real money then comes into play. Now, number 7 is the emotional discipline. I would stress that this is the most important thing when it comes to trading. Trading is 90% psychology and only 10% strategy. It's very, very important that we understand that. Now, there's no coincidence that a lot of people and a lot of traders that you know, the successful ones, work on self-development. Now, I've been working on self-development for a very, very long time when I had to change from the habits that I had from being a professional footballer and all these things to really changing myself as a human being. Now, the Daily Stoicism really, really helped me, and reading tons of books that you've seen all over YouTube. Now, without those stuff, you're probably never going to be able to develop the skills of controlling and going through emotional discipline. Now, most traders, as you know, have that self-discipline because it's going to test you big, big time. And it's going to highlight your flaws as a person. And that's why most people drop out, shy away, because they're not willing to work on themselves. So emotional discipline is something that you must work on while you're working on your trading strategy. Now, within the emotional discipline, as we know, you're going to have big, big pitfalls. Fear, greed, anxiety, all these things are going to creep in when you are in a trade, and you may not even be aware that that's what's actually happening. But the more that you work on your self-development, the more you're going to understand these emotions, and then you're going to know how to deal and learn the skills to control those emotions. Those emotions are never going to go away. It's like stress. Stress is never going to go away. But what you learn is how you control stress. So how you will control fear, how you will control greed, how you will control that anxiety you have when you're in a trade. Now, the final point of this is continual learning. You must always, always be willing to learn. Now, your strategy may work for a short period of time and then it may go wrong. For example, at the moment, swing failure patterns are really working for us, not so much our golden pockets. So we know that we can have a look at swing failure patterns. When the candle closes, how many candles are we waiting for? The 30-minute, the 15-minute. So we need to adapt to the market. You don't need to go and learn a brand new strategy, but you just need to understand maybe the price is doing certain things at the moment. Now, a lot of the time, strategies will continue to work for a very, very long time, but you may have to adapt. Now, continual learning is something that you're going to do, whether it's books, whether, again, it's meditation, whether it's exercise, reputable websites, top traders that are out there, not so much influencers, but traders that really, really give you that good knowledge. There's a few people on Twitter that you can follow. There's also a lot of people out on Discord. Again, we have our community. If there's something that you want to get involved, make sure you do get involved with the links below, etc. However, there is so many resources out there for free as well. So make sure you are always looking to improve and learning each and every day.